Now, can you see my screen clearly here?
Yep.
Okay, it's a little smaller graph, but I just wanted to quickly touch on this before, again, I go into the numbers. This factors in, again, as to why Calgary and Alberta itself is a little bit different than the rest of the markets. So look at here, you have the graph starting in 2019, Q3, COVID talks are starting to heat up right around Q1, 2020, and you start seeing the migration really drop to negative, negative numbers, and then we start seeing positive in 2020 again, a little bit of negative again in 2021. But then between Q2 and Q3 of 2021, we see a huge increase, 16,500 of migration to Alberta. And this number has stayed very steady quarter after quarter since then. So what's that showing is an increase in demand. These people need housing, right? And there's another graph here by province. Like Alberta, 465% change in Q1 of this year in immigration. So, that's going to prop up our market. It's undeniable, right?
Ladies and gentlemen, you are watching the Canadian Real Estate Channel. Hi, I'm Alec, and today I'm here with Tristan. We're going to talk about Calgary. How are you, Tristan?
Good, man. How are you doing?
I'm doing fantastic. It's a beautiful day out here near Ottawa. How is it out there?
A little cloudy, but honestly, we get so much sunshine here. It's not a bad change of mix, so we're all good.
Yeah, and you guys just wrapped up the Stampede.
Yeah, no, it's we had a big Stampede week, 10 days, a little bit hectic down here, but it was good to see the city come together. Last year was during COVID, so it was about half the size, but things are really back to normal in the downtown, and it's good to see.
Yeah, that's good to hear. So if I understand correctly, after we go over sort of a regular type analysis, we're going to get into some short-term rentals.
Yeah, no, I have a couple listings that are live on the market. Have a little breakdown for someone who wants to actually invest in short-term rentals. Just a breakdown of what you can potentially profit net after management. I have a few live deals going on in Calgary, so a few opportunities for anyone who's interested in that kind of investing.
Yeah, I mean, myself, I have tons of experience, right? Like I had a 4-bedroom house downtown Ottawa, and we rented 3 of the rooms there. And in about a little over a year, we had like 1,500 guests come through. And what I found was like a lot of them didn't even use the kitchen or the living room. They were just there to see the town.
Yeah, it's amazing actually. When I first got into this business, I assumed that there'd be a lot more parties thrown and different kind of guests. Now we vet our guests obviously through a few different ways, but I've been very impressed with the kind of the obedience and also the respect that they give to the property. And honestly, compared to people being in there long term, it just seems like the wear that I've seen on my properties at least has been pretty minimal. So it's really cool.
Yeah, I mean, we have multifamily properties all over Canada, and like we try to keep at least one short-term rental in each one. And yes, it does provide significant cash flow, but what it also does is it gives us the option when we're in the area to just stay in the building.
Absolutely.
That we're right there, we're close, we never have to deal with that.
Yeah.
And the one thing that I also noticed was that because there's a feedback system, right, with Airbnb, which of course isn't the only short-term rental out there, but there's a feedback system. People are accountable to themselves.
Mm-hmm. Mm-hmm.
And
Absolutely.
what that does is it creates a really strong relationship with the owner and Airbnb, and I find it goes out pretty seamless.
Oh, absolutely. No, it's obviously at the first start of a new listing, there's always a few hiccups and things you don't necessarily are aware of. But as you progress, I mean, it can be a smooth working machine for any investor looking to just bring a bit more profit into the mix. Having a mix of obviously long-term and short-term rentals, I think, is an ideal combination. You can't just always rely on one source of of income, and you want to diversify your portfolios, right? But it's definitely one of the things you want to have in the mix if you have a few options for you.
Yeah, and I'm sure you did good over the Stampede, but what's it like there where you are, like your vacancy in a month, for example?
Yeah,
With
so
Air-
it's a good question. I mean, obviously, you can look at Stampede months of July and August and even June, which are peak months, and just use your numbers to brag about the occupancy rates and the actual nightly stays. But if you look at Calgary, you want to, obviously, take the worst case scenarios in any investment standpoint. So we do look at the average throughout the year. And we do have, a citywide occupancy rate of 70%, across all the suburbs in Calgary. Now, if you're looking, more downtown, you have to, break down those statistics to see what that might be. But again, our company, we do have an occupancy rate of about 81% for across our listings, which we're proud of. But again, there's a few things that we can do to get you to that occupancy rate. People who are riding, at 70% average, there's a lot of people in there who are mismanaging their listings as well, which brings down that number. But there are things you can be doing to really drive up the occupancy, which is the most important part, and not being too greedy with your nightly stays as well, being realistic, and as well just accounting for the worst case scenario to make sure that, in the worst situation, like even COVID happens, or, a decrease in tourism happens primarily, that you're going to have your butt covered as far as expenses go, in that situation. So.
Wow, that was well said. So you're in Calgary. How long have you been in Calgary?
I grew up here. My family moved across Western Canada quite a lot when I was a kid, but spent some time in BC and Vancouver as well. Came back to Calgary about 4 years ago, got my real estate license. My family's always been interested in real estate investing. We've had a lot of renovation projects that I was a part of growing up. But, taking the reins and becoming a realtor was just a lot more interesting for me because you do get a bit more knowledge on the market. You're kind of more plugged in to, anything going on, off-market listings, things like that. So it is nice to be in that market industry, have your ear to the ground so that you are available when times come up, and you are available for clients in that capacity as well, right? Because that's the main goal here is finding good investments for people and for the everyday person.
Well, fantastic. I'm glad you've made yourself available for us today, and I'd love to see what you got for us.
Yeah, absolutely. Thanks for having me. Now, I'll pull up the presentation I got for you here. I got a few different screens I want to show over the course of the video. But here we're just going to bring up the main page. And before we get to that, I just want to give you a quick overview of Calgary's market in general throughout the year. I mean, obviously, it's a big city. It's one of the biggest major centers in Canada. However, very different than markets that you see out in Toronto, Montreal, and Vancouver, which are a whole different level of insanity. So we've experienced very similar trends as you guys have throughout the year. Obviously the kickoff in January, where you had a huge increase in sales and a very big lack of inventory, which led to huge benchmark shifts upwards. Now, I think what you guys have been experiencing more lately is a bit of a downturn in the last couple months. From what I've talked to a few colleagues out your direction, there's been 5% drop within a month in some situations across some sectors. And part of that is based on the flood of inventory coming in. People trying to cash in on the big market, and also buyers pulling back as well due to concerns in market stability. And interest rates rising does not help that either. Now, what we experience in Calgary, however, is a little bit different. It's a little bit more the same, but it has different characteristics to it. So obviously, sales have dropped a fair bit in the last 2 months. We've gone 3 months now where sales have continued to decline, but where, contrary to where you guys are there, our inventory has not rose. Our new listings has also decreased at the same pace that the sales have. And that's basically is the driver of pricing, and benchmark pricing is supply and demand. So unless you're going to have a flood of inventory or a huge significant decrease in sales where inventory remains the same, then you're going to have pretty similar pricing. You're not going to have an extreme buyers or sellers market in that situation, and that's why we remained so balanced the last 3 months, which is in contrast to I think a lot of the bigger centers in Canada.
Yeah, absolutely. I was just talking to Abdella from Hamilton, and he was saying that exactly what you mentioned is like the prices are going down, you know, but in Canada, we are in a housing crisis, right? And a lot of people are reacting to the interest rate hike that's happened, and maybe future ones that might happen, right? We can't predict the future here, but certainly we've been expecting a market correction for a long time since the pandemic started. And obviously Calgary being so large, you know, you can't just look at the whole country and see this is what's happening nationwide.
Exactly. We have a lot of different factors that come into play in Calgary. And another thing, again, to touch on is that, you know, so interest rates, they started rising, you know, earlier on this year, you know, I believe in March and April is when you start to hear a lot of talks about that. And you start to see some of the implementation of that happen earlier on. The thing is, though, you have pre-approvals that are locked in for 3 months. So people still had a low pre-approval, and you had a carryover until that actually started hitting us and affecting us. And you are starting to see that more and more this month, just because, you know, all the pre-approvals that were on a lower rate are now kind of all passed and done. Everyone who wanted to buy bought, and that's why you're seeing a big drop off in sales. And thankfully, you know, for Calgary's sake, that things have remained stable because of there hasn't been very many new listings. That won't always be the same, I don't believe. I mean, I do think that our inventory levels historically low still. We're still set for a strong finish to the year. However, the more people think about it, like, so say a seller, for example, is going to sell their house in 2 to 3 years. That's a retirement plan, or that's their upgrade or downsize plan. Maybe they're thinking, hey, well, you know, they read the news, they see the recession, looming recession and all this stuff. It's a psychological game. And they're going to think, okay, well, maybe I should start selling now. And that's my concern, is that people like that, the average seller is going to say, okay, let's beat the market before it slows down too much and get out. And if we start experiencing, you know, influx of that situation, we will experience what you guys have gone through over there and start seeing the prices drop. But right now, things are pretty steady. We haven't seen any kind of decreases as far as benchmark prices go.
Right, and it's like a yo-yo on an escalator, right? I don't know if you've heard that before, but they do go up and down, and there's all kinds of factors, but generally speaking, property goes up.
Yes, exactly. And that's the rule to remember as well. It's like, are you making a short-term investment or a long-term investment? And I think a lot of the clients here should really think long-term here with this. And there's going to be ups and downs. What does that investment look like on a monthly basis? Are you cash flowing? Are you able to cover your butt if things drop? And, you know, look at the worst case scenario here. Look at the 3-year plan, the 5-year plan, the 10-year plan. Are you going to come out profitable? And I think if you look at historically, real estate does, you know, tend to trend towards a 2% inflation rate over time. Obviously, this last year is a bit of an exception in the last 2 years because of some outside effects. But I think that's what, you know, everyone has to remember is, what is the best avenue for my money in the 10-year scope? You know, is it in real estate? Is it in crypto? Is it in stock market? It's up to you to make that decision. I personally do like real estate. I'm a big fan of real estate. It's important to diversify, but I do think that it still is a good vehicle for people looking to invest. Now, can you see my screen clearly here?
Yep.
Okay, it's a little smaller graph, but I just wanted to quickly touch on this before, again, I go into the numbers. This factors in, again, as to why Calgary and Alberta itself is a little bit different than the rest of the markets. The relative affordability is still a thing here. You know, the benchmark prices, the cost of living, the livability of the city even is very attractive from that standpoint, minus the cold weather that some people don't like. It's a good place to live, and that's why we're seeing these kind of numbers in immigration from other provinces, as well as international immigration towards Alberta. Now, if you look at here, you have the graph starting in 2019, Q3, COVID talks are starting to heat up right around Q1, 2020, and you start seeing the migration really drop to negative, negative numbers, and then we start seeing positive in 2020 again, a little bit of negative again in 2021. But then between Q2 and Q3 of 2021, we see a huge increase, 16,500 of migration to Alberta. And this number has stayed very steady quarter after quarter since then. So what's that showing is an increase in demand. These people need housing, right? And there's another graph here by province. Like Alberta, 465% change in Q1 of this year in immigration. So, that's going to prop up our market. It's undeniable, right? And part of the reason is the livability of the city and the affordability. And that's really a driver to the market. And that's why I think it's more of a market correction, what we're going through, rather than, an artificial bubble that we're in. I do feel like this is really, proving to be a bit more stable than I think a lot of people speculated on Alberta and on Calgary.
Yeah, well, you mentioned, the stock market, and you mentioned cryptocurrency.
Mm-hmm.
And, of course, as investors, we're very interested in those things. But again, historically speaking, real estate isn't only one of the most lucrative investments, but it's always the safest.
Yeah, exactly. And that's what it brings in too, is like having a mixture of long-term rentals and short-term rentals, property that you can bring value to or redevelop. And there's just so many things you can do with real estate. There's many different exit strategies as well, and ways you can kind of optimize value at a property. Whereas when you're stuck with, stock, for example, there's only so much, you can actually work with to do that. You're kind of at the beck and call, at the will of the stock, rather than in real estate, you have a bit more control over how you do that, how you go about it. There's many different real estate investors out there. You can kind of choose which one you want to be. But there's some really cool opportunity. So I'll go back to my other presentation and we'll look at some actual numbers here. So June 2022. Now, the reason I started in June here is just because I didn't actually do a June market update last month. I was unavailable to hop on. However, what we're experiencing here, and I'll show you the numbers exactly. So June 2022, detached semis, rows, and apartments. Now, I think you guys have similar terminology out in Ontario. Semi-detached, like a half duplex. I want to kind of show you all four segments because it's important to kind of see, they don't all run in sync. And what we experienced actually with detached this last month is a slowing of sales in detached for the first time this year, and an increase in row home sales. Now, I think a big part of that is due to the affordability of people's mortgages. I know the stress test is higher. They're cracking down on how much you're able to borrow, as well as, prices have continued to increase month over month this year. So it's kind of drives people down this chart from detached semi to row based on affordability. Because obviously, most people, unless they want to live downtown in a high-rise lifestyle, they do want to have the autonomy of a detached home or a semi, rather than be, buying into a condo of some sort in a shared living space. So months of supply is another interesting factor here as well. So we can see that months of supply for detached is sitting at just under 2 months. That has stayed relatively unchanged into July as well. We're sitting at about 1.9. So again, because we're having a slowage of sales and new listings, what that's doing is making the market a bit less competitive. You're seeing a lot less competing offers, less bidding wars. And in lieu of that, you are seeing days of market or days on market rise as well, because based on the competition, people are starting to enter more conditions into their offers. It's starting to be a bit more buyer friendly, but it is still very balanced, and the price points are yet very unaffected by that. And one thing I want to touch on too is different sectors of the city. So we're just going to scroll up again. Sorry. Calgary is broken up into 4 quadrants, but in 8 quadrants in total when you take the sub quadrants. So we got, typically people refer to Calgary as the Northwest, Northeast, Southwest, and Southeast. Now you'll see these numbers and you'll see, okay, so city center rose 8% year after year from July of 2021 last year. The west side only 11.9%, east side 10.7%. And then you have the suburbs like the north, hitting almost 19%, and the southeast 18%. Why is that? Well, it's relative affordability. These neighborhoods, these communities are very far in the suburbs. So typically you're going to have, lower cost of entry into the market, more starter home type accommodations. So you are going to see those markets increase as affordability becomes out of reach. So these markets have really taken off in the suburbs, whereas this, more expensive areas of city center, the west side's more exclusive. You've seen the market there haven't had the same response, just based on the benchmark prices being already quite a bit higher. Because the big driver of our market has been detached homes from 500 to 650,000. That's your starter home for a single family. And that's what's been the hot commodity driving the market. So that obviously isn't available in, city center and west side, but more available in like the north and south sprawl of the city, right?
Yeah, I think it's a nationwide phenomena. Like we're seeing migration out of city centers,
Mm-hmm.
and then that really opens up the space for the people coming in to Canada, being able to choose like what kind of area, what kind of city, what kind of landscape they really want to live in.
Mm-hmm. Exactly. And what we experienced too, and so those new areas of the north and the south, a lot of the developers, a lot of the builders actually put building on hold in the meantime. So it really put a squeeze on all of the new builds. Anyone who wanted to buy a new home, there was almost virtually nothing available in Calgary for many, many months. And part of that was they were waiting for the price of supply and material to go down. So they were putting everything on hold. It wasn't that they were being greedy necessarily to wait for the market to continue rising. That could have been part of it for some builders, but it was mostly due to the fact that they wanted cost of material to start decreasing a bit to kind of hedge their bets a little bit and average themselves into the market based on their builds. They didn't want to build too much because they did think that things were going to start coming a bit cheaper again. So we are seeing a lot more new builds becoming available now. Finally, they're being released different, like phase 2, phase 3 of certain projects that were on hold for so long, which is again put some ease on the market for the average home buyer looking to get into a single family home.
Lots of really great information.
Yeah, no, absolutely. And the more we can look at statistics, I mean, statistics are one thing, but also just having an understanding, having a feel for certain areas of the market in Calgary, and knowing where you're going to buy. If you're ever looking at buying Calgary, I always recommend to all my clients to fly out here, take a tour for a few days, take a weekend, and really get to understand the city, because you can look at stats all you want. And I do have clients who do put trust in us to do virtual tours for them and take them through homes and explain areas through Zoom calls and what have you to make them comfortable. But I always feel like it's the best to really immerse yourself in the market as much as you can, so you can really have an idea of when you see value when it comes up, right? Because stats don't always tell the whole story, unfortunately. Here we have a little bit more of July statistics. I just want to show this quickly on an example just to prove that numbers are really dropping for both sales and new listings. So if you look at June 2022 versus July 2022, we're almost done July. We've got maybe 5 more days left, so this number is going to change slightly. But I've already looked at what's pending. It doesn't look like this number will become above 2,000. And versus 2,800, that's a drop of around 800 sales in the course of a month. That's pretty significant. That's to the tune of around 30% drop and decrease in sales. But I mean, check this out too. You have new listings at 2,600 versus last month 4,000. So that's dropped 1,400. This will probably pop up to 3,000 for the end of the month, but that's still a drop of 25%. So that's what I'm saying when it comes down to absorption rate, how the market's taking the new listings. It's almost identical to June and also to May. Really haven't seen much change in that sense at all, which is actually good, because I think the market did need a bit of a break. We did need to see things stabilize a little bit in order to adjust to what's happening. And again, unless we see a surplus of inventory, which I don't see happening right away, we're not going to start seeing any kind of significant drop, at least for the next few months.
Yeah, because certainly the builders that you mentioned that have slowed down,
Mm-hmm.
they're not going to stop forever, right? So there will be new inventory at some point in the future, but it sounds like because of the cost of everything continuing to rise,
Yeah.
you said hedge their bets, but I'm sure that they're just recalibrating, their decision making so that they're not putting themselves in the hole by continuing to provide housing.
Exactly, and they're kind of averaging themselves in as far as understanding the market and seeing how the waves are going. Now, City of Calgary, another important thing to know though too is that right now there's basically no red tape when it comes to development permits or rezoning. So you have a lot of people coming in buying these older bungalows on 50 or 60 foot wide lots by about 120 deep in the inner city, and they're densifying. So anything that you can convince the city that you're densifying will be approved right now. And that's great. I like that. I do believe in a free market, and that, if a developer wants to do something and densify a certain area, they should be able to do that, especially when it comes to the inner city, and especially because of basically the housing crisis that we're in. So I agree with what the city's doing. I think there'll come a point where they're going to start cracking down on that based on inventory. there will be outside pressure for them to start holding a bit of the permits, just because there's a lot of developers out there, a lot of builders, and if we have an oversupply of inventory, that's one of the first places that we're going to start seeing crack down on is the approvals for upzoning and the approvals for development permits, because you're taking this single family home, tearing it down, and depending on the zoning, you could be building anywhere from a fourplex up to a low rise apartment building on it. So I think it's good, but again, if it becomes an issue, that would be one of the first things to change.
Yeah, well, what we're doing in Ottawa is called 15-minute neighborhoods, right?
Mm-hmm.
And it's kind of like a pilot project for Canada, but essentially we're taking, like you said, bungalows, and we're rezoning them so that they can be a fourplex, and then every 15-minute neighborhood is now going to be encouraged to have enough commercial so that people don't have to go to major city centers in the city to get the things they need.
Yeah, that's exactly what we're doing too. In areas in the south and the north, like in the new communities, they're called master plan communities. I guess you call them 15-minute cities. Same idea. They have their own like recreation center, like their HOA center, where they have all the recreational activities for the kids. They have their own school for the neighborhood, and they have all the commercial and retail space that you could ever really ask for. So it's becoming a bit of a popular item. A lot of people are kind of migrating towards those communities, a lot of young families, which is why, again, when you look at the quadrant stat, you see the north and south just blew up, right? It was experienced the most exponential growth out of anywhere in Calgary. And you still are seeing, a bit of a shift. Like the last 2 years in inner city Calgary and downtown especially, and that's where I live, it felt like a ghost town for much of the year last year. And then even at the start of this year, it felt like it wasn't the same. It wasn't the same old Calgary. And I'm sure it was like that for many cities, especially with work from home orders. Now, there's a lot of vacant office space in Calgary for one. That's a whole separate issue. But we are seeing a lot of immigration of tech companies HQing here, as well as a lot of, even the oil and gas companies saying, come back to work. We need you in the office space. So you are seeing a lot more reason to be downtown. And like, even when you go out, I mean, you have to make a reservation now, whereas before you just walked in, like it is getting way busier. And you are starting to see an uptick in the transactions, but as well as the price marks of inner city condos. So, since January 1, the price of a rental in Calgary has gone up 22%. And there's a 1% vacancy rate in Calgary right now for rentals. So any kind of landlord who wants to purchase a property right now, it is total landlord's market. We had a duplex that we bought actually last month, just 15 minutes north of the city in like an older community. It was an 80s duplex, but it wasn't anything special. Side by side, the rents were $975 a side, and the market right now dictates that they're $1,650 to $1,700 a side. So, unfortunate situation for the tenants, but that is the market right now. It's been incredible for investors in Calgary at the moment.
Great insights.
So I do want to touch on one thing we chatted about a little bit earlier at the start of the call. I do want to show you guys a live look at a couple Airbnb options in downtown Calgary, give you a little bit of a breakdown on cost of ownership versus what you could potentially bring in for revenue, and just a little bit of a calculation of what that would net you on a monthly basis and how that looks for potential investment. Just want to show you this one here. I'll show you the location first of where this is. Now, the inner city is broken up into a few different areas. We have the downtown commercial core, which is all the office buildings, kind of from basically 9th Ave all the way to Eclair, a ton of office space. We have Chinatown over here by Center Street. And we got East Village, which is where this listing is. And I have actually a couple other Airbnbs in East Village. It's more of a trendy area, new development, kind of built out in 2015, and still new high rises coming. It used to be a bit of a seedy area, but they've really redeveloped this whole community. Victoria Park, this is where the Stampede Grounds are. So as you can see here, this is the big rodeo grounds, and this is the Saddle Dome where the Flames play. This place, Victoria Park and East Village combined make for like really good walkability, as well as, close to the event centers, which is good for if you're looking at short-term rentals. If you go as far as Sonalta over here or the Beltline, not bad communities for long-term tenants. It's a little bit quieter, but for a short-term rental, it really depends on what kind of clientele you're looking for. But that's kind of the breakdown of what it looks like downtown. This one here is in an Airbnb friendly building. This realtor obviously understands that a lot don't, because it's a little bit convoluted as to how it's allowed for Airbnb. Now, in Calgary, in Alberta, we call them condo corporations. They write the bylaws for the condo. And this one here is done by a developer called Battistella. There's a few Battistella projects in downtown. All their developments are Airbnb friendly. They wrote that into their bylaws from day one. And there are some rules you need to follow in regards to that as well. You have to have some compliance, and there's a strike system for people who aren't complying. So I actually really do appreciate working with a building who knows about it. It's all above board. Because again, so many guests walk into an Airbnb and they're told in the check-in instructions, don't mention to anyone it's an Airbnb, say you're staying with friends, things like that. The lock box is in the back alleys behind a bike rack somewhere. It just feels a little bit shady sometimes. So it's good to be above board with this, because not only are you making your guests have a better time, you're also protecting your investment from eventually being found out about by a neighbor or the condo board, and basically being fined until you change your course. So I do encourage, we have an exclusive list of Airbnb friendly buildings in Calgary. If you guys are interested, we can kind of set you up on a search that's based primarily for buildings that allow for it. But this one's 289,888. It's been on the market for 19 days. It was not sold prior. It was sold by a developer in 2018. So we're not able to actually know what that sold for. Now, 2018, things were basically at an all-time low for inner city condos. So I would assume on the top of my head that this would be more of a $225,000 unit back in 2018. And I did an evaluation for another client of mine, and my evaluation comes to about 260, 265. So I do believe that's the reason this unit's not selling, because it's a little bit overpriced. But I'll show you a couple photos of it. This is a 500 square foot corner unit, tons of windows. It's actually a really good layout. It's got a den as well.
Now, what kind of income are we talking about daily?
So this is a good number. Good question to ask. Occupancy rate in Calgary is 70%. We average about 80%. That's our goal. So the average daily rate for a one bedroom in this area is actually $161 a night, based on the cumulative data of all the one bedrooms in high rises. Now, I typically like to err on the side of 20% less than that, just to be safe. Not only to be safe, but also because if you're listing this property right now, you're going to be fresh on Airbnb. They're not going to, you're not going to be their friend when it comes to algorithms, and you're not going to have the momentum that other people do have when their listings, 2 or 3 years old and matured. So you're going to have to be coming in a little bit lower anyways, which is why I always calculate about 20% less. And that would bring you to about $130 a night, which again, doesn't sound like much, but the numbers actually still work really impressively on this one. 130 bucks a night at 24 nights, which is 80% occupancy, brings you to $3,026 of revenue after you pay Airbnb the 3%. Airbnb has the 3% cut for hosts. This brings you to just over $3,000. A long-term rent for this unit, because it's only 500 square feet, comparable rents are about $1,500 a month. So if you were to buy this as a long-term investment, that's all you can really hope for. Now, when you take into effect your purchase price of $260,000, your down payment of about $52,000, that's 20%. Your mortgage is about $967,000, condo fee $247,000 a month, and tax is $178,000 a month. That brings you to a total expense of $1,392 a month. So $1,392 a month, you're bringing in $3,026. A management company is going to charge you anywhere from 20 to 25%. Let's say 22. That's $665 a month in management fees. You are going to be netting about $2,361. Now, I don't have this written out for you. I have it on a PDF, not in front of me, and I could send it to anyone who wants it. But after your cost of borrowing, your cost of property taxes and condo fees, after management fees, you're still netting $969 a month at a 20% decrease in average nightly stay. So that's a really safe number. And you can actually, that's 2% ROI on your investment of $52,000 every month. That brings you to basically 24% return on investment on an annual basis based on the 20% down you put in a worst case scenario. So These options exist. There's not a ton of listings available in Airbnb friendly buildings, but there will be more like this coming up. And I think it's a really good opportunity for people who want to really bring in a little more revenue. Even on a long-term basis, I mean, your holding cost on this is $1,392. You can rent it for $1,500 to $1,550 on a long-term basis if that's what you prefer, and you're still going to be netting, you know, 100 to 150 bucks a month, which isn't much, but I mean, you're breaking even, which is more than you can ask for in most markets. So even in that situation, it's not too shabby.
Yeah, and what happened in Ottawa, because there were so many people that recognized the opportunity in investing in short-term rentals, was they were buying up all the homes. And so what the government had to do, which it's amazing they haven't done this in Calgary or other places, right? Having Airbnb-friendly buildings and situations is fantastic, because now in Ottawa, you can only do an Airbnb in your primary residence.
Yeah, no, I heard that, and that's something that Alberta is different in a lot of situations. We're a tax-friendly environment where we have a bit more liberty when it comes to real estate and autonomy as a landlord. Now, like, we don't have rent controls here, for example. Like, that's why we were able to go in last month and serve notice for the increases that we did, which is because if we lived in Ontario or BC, we'd probably have, you know, only 2% a year or something, right? What's the number out there? Do you remember?
I can't say I know for sure, but sometimes it's not even as high as 2%. Like in Quebec, I think it's less than that.
Yeah, and that's just insane to me, right? Because I grew up here, and I understand this market, and I've never even thought about that. And even land transfer tax, like, we don't have any land transfer tax on closings here. Once tax is paid, it's paid on a brand new property. So you save in closing costs, and you have the autonomy of a landowner, of a property owner, which is what I believe in, and it's proper. So, you know, if the rent does go up like it did this year, it went up 22% in 4 months. Like, imagine if you were out in BC, Ontario, went up that much. You'd just be, you know, kicking yourself, thinking like, man, I wish I could, you know, bring in a bit more profit from this. Not everyone thinks that way. A lot of people are okay with just, you know, having really good tenants and not increasing rents, and that's fair. But having the option to do what you need to do with your property is important to me.
Yeah, and I think you know, the government is sympathetic generally to landlords at this time because of the massive price changes that have happened. These rules that we had established for, you know, decades, they're being reviewed, and in a lot of cases they're being changed.
Yeah, exactly. And so, no, it's interesting to see how this will play out, especially in Alberta with Airbnb stuff. I know there's been case law from a condo corporation to a unit owner that used it for Airbnb. That was up in Edmonton. The condo corporation was successful in the ruling, so that was something that actually set precedent for people to be extra careful when it comes to which buildings they're going to be operating in. Now, a lot of people are operating in non-compliance, which is okay. The reason I recommend my clients not doing that is because, again, it's coming down to protecting your investment. And it really is a business, right? Because it is a business in the eyes of a bank, because you're going to have to accumulate 2 years of financial data before you're going to get any kind of loan or credibility for the income you're bringing in. So, you know, in a way, you are protecting your business because you're relying on that. If you're doing a long-term, it's different, because the bank can take long-term leases and turn that into income and credit right away, but not with short-term. So,
well, those are fantastic insights. So can you tell our viewers, like, for yourself and your business, kind of what your long-term goals are? Because it is quite unique to have a realtor that is conscious of the opportunity of short-term rentals. You know, a lot of these people that we're talking to, they have their little niche, you know, and I think not enough people are talking in the investor world about the upside of short-term rentals. You know, there's a lot of times when you're underwriting a multifamily property where you're saying, like, man, if I could only get a couple more hundred in there, I could really make this work. And what I've been advocating to my colleagues in the multifamily space is you really should diversify your long-term and short-term rental. We didn't have that option 10 years ago.
No, I know. And that's the thing too. A lot of people think that Airbnb is too diluted now as well. I think there's a bit of a common misnomer of that. But even in a worst case scenario, like we talked about, you're still going to be ahead of the game compared to a long term, and you have the flexibility to stay in there yourself if you need to. And also you have less wear on the property. It tends to stay in better shape over the course of time. So I do think that even in the worst case scenario, have someone manage it for you. You're still making more than if you had a long-term tenant. And in the best case scenario, you're making a lot more. So I do like the flexibility it brings people. And also, like, what got me into it was actually about a year ago. Maybe it was less than that, actually. It feels like time flew. But there was a property that was a semi-detached, so a half duplex that was zoned in such a way. It was actually zoned for multi-residential because of where it was in proximity to other residential. But it was a half duplex. So it was actually, you could legalize 2 basement suites and the main suite. So it was a bi-level. So they had 2 one-bedroom basement suites and a 3-bedroom main floor. And they were bringing in, that property sold for $475,000. They were bringing in like $6,000 a month in revenue from Airbnb. It was close to transport. It was 10 minutes from downtown. So it was a good location for that. But it wasn't like you saw that property and thought it was special, right? It wasn't. But it was bringing in special numbers. And a situation like this too, it's like, okay, how can I hedge myself a little bit more and diversify? Because again, so the reason I don't just look at Airbnbs, I look at it from all ways you can, because you can't just put all your cookies in one basket, right? You got to have your stuff diversified, because my family, for example, was very heavily involved in just one discipline of real estate, and it really dropped on them. So diversification is kind of runs with me now, because I don't want that to happen to me, right? Or my clients. I want them to be have multiple exit routes and also just multiple investments. But you can take that property, for example, and do a long-term tenant on the 3-bedroom upstairs, and then have 2 short-term tenants below. You kind of have best of both worlds. You have the balance that you need. So it's just flexibility like that I like about real estate, right?
Yeah, well, I love the way that you're putting it so simply, because, young people especially, they need to figure out a way to deal with the changing atmosphere in the real estate market in Canada, because a lot of my peers, I don't know about yourself, but they were maybe trying to buy their first home right before the pandemic happened, and things spiked up. And when they were expressing their frustration, my answer always, as trying to solve a problem, is like, you just need to pivot, right? I always tell people that you should be getting into like a triplex, or some can still classify as a personal residence, and take advantage of that first-time home buyer's mortgage, and include short-term rentals, and you're really able to build equity that way. And just by taking a year of your life, by doing that, you're putting yourselves in a really fantastic position to get something that's a lot closer to your dream home.
Exactly. No, I like the way you think on that too. It's important, and you can't just look at one thing, right? You have to be open to everything. It's not just cut and dry like it was maybe at one point with real estate. You have to think outside the box a lot, and that's probably why I like it so much. Is that every day is different, and you have to get creative with it, right? So I'm sure you do too.
Yeah, absolutely. And I love people. And we're dealing with people's needs, which I'm absolutely passionate about. Trying to create our company's called Home Group, Heaven on Mother Earth, and we're really trying to bring heaven on Mother Earth to our tenants and our clients and our investors. And it's been fantastic talking to you today, Tristan. If you're trying to get involved in the markets in Calgary, reach out to Tristan. He's clearly a creative young man, and I think it's fantastic to hear about more people who are leaning towards short-term rentals.
Awesome. It was great chatting with you, man, and we'll see you again next month.
Ladies and gentlemen, that was the Canadian Real Estate Channel. I'm Alec. Bye, love ya.